A new week, a new record. The S&P 500 closed at an all-time high, extending its gain into a fourth week as investors cheered corporate earnings. According to LPL Financial, today is historically the best day of the year for stocks, and it starts the best six-month stretch for the market. And today did not disappoint. The Dow Jones Industrial Average was up 132 points to 27,090. The Nasdaq added 82, and the S&P 500 rose 16. And as you know, earnings can often drive rallies, but this move higher appears to be driven by what's not being said on all of those earnings conference calls. Bob Pisani explains.
We're coming up on the halfway point of earnings season. So far, there's one big word investors are not hearing, and that's recession. There's plenty of issues still out there, but the U.S. consumer, which has been the engine of global growth, is still holding up. We've been scanning the conference calls, and out of roughly 200 companies that have reported over the last month, just 32 of them have mentioned the word recession. And that, along with hopes for a trade deal, is the major reason the S&P has hit a record high today. The consumer's holding up. Bank and credit card CEOs in particular have painted a very healthy picture of the consumer. Zions Bancorp CEO said, "We don't see any indications of a broad-based recession on the horizon." Richard Fairbank, CEO of Capital One, said the U.S. consumer is in good shape thanks to a strong labor market, rising wages, and last year's tax cuts. Home builders have also touted strong consumer spending. Stuart Miller of Lennar said despite all the talk of a recession, customers don't seem to be viewing it that way, and the housing market in general seems to be strong. Then there are the autos and industrials. That's a far less rosy outlook. Graco's CEO said the trade war and the slowdown in automotive in China is really putting some strain on industrial activity across the board over there. The bottom line is this: it's unlikely a recession will become a self-fulfilling prophecy. That's very good news. The economic narrative has shifted from recession earlier in the year to slower but more stable growth, a far less dire scenario for 2020. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.